What's going on, traders? In this podcast, we're going to be talking about the importance of using a trading journal. I talked about it and I made a video about how I journal my trades and the program I use and exactly my thought process while journaling my trades is. So check that out. I think it's a pretty good video and it might help you guys learn how to journal your trades better and help you become more consistent. So yeah, I use a journal to look at all my past trades. I've learned a lot just from going back and just looking at all my past mistakes, like multiple times too. Like I've gone back and looked at all my trades like multiple times, like 4 or 5 times, and I almost learned something new every time. Um, it's important to go back and be like, oh well, like I'm not doing that bad. I wouldn't be down that much money. I made a lot of rookie mistakes. Like look at this trade I took last October, right? Something like that. You see patterns. Um, you see patterns in the trades you take. It's like you can just kind of memorize them, right? Like, oh, that's the setup. That's the set. This is the setup that's coming up right now. That's the setup I like because I just went over and looked at all my trades. That's the setup that's been working for me. That's the setup with the highest probability of winning for me. Now I'm gonna double my size on this trade, right? Like, let's just say, let's just say every month you go over your trades, right? Let's just say every 2 months you go over your trades. Let's just say you took 50 trades just to keep the number pretty simple. 25 of those trades let's just say 25 of those trades were winners, and you noticed this specific setup, it was working for you, right? And the probability was the best for those trades. Well, now after you journal your trades, the next 2 months you can double your size on those trades if you're confident and you think that they work, and you looked at your journal and you saw for yourself that they've been working. You can double your size. You can risk twice as much. You can risk 2%. You can risk more than what you're risking right now because you know those trade setups aren't the best. And then you look at all your past trades, you notice that this other setup that you're taking, it's not bad. Like it's making you money in the long run. It's not the greatest setup, but it still works every now and then. Maybe you can half your risk on that. Instead of taking 1% risk, you can risk 0.5%. You still want to take those trades, right? Because in the end they work, but the probability might not be the best. So you can just half your risk on that, right? And then you can put the majority of your risk on the trade setups that you know are working. And the only way you know that that's the only way you can know that is by journaling your trades and looking back on your journal. And the important thing is to, yeah, okay, you can journal your trades all you want, and that's fine because there is something to writing something down, taking a screenshot, doing all that stuff, right, where you kind of remember and it helps you out that way. But the important thing is to also be going back, like I said, and looking at the trades. You know, you don't have to go back and look at all your trades every week, but it's important every couple months to go back and look at all your trades, look at what you're writing down. Maybe every week, maybe every month you can go back and look at all your trades for that month. Maybe every week you could go back and look at all the trades you took for that week. Um, and then, like I said, then you can start doubling down on the things that are working for you, and you can start taking less risk on the things that are pretty things you will still want to trade, but the ones that are mediocre, you can start having your risk on that. And I think that that's very important because let's just say you sell cars, that's your job. You're a car salesman, right? Let's just say at your dealership you sell the most minivans. Well, you sell the most of minivans. You also sell some trucks too, but obviously your highest profit margin is on the minivans. So then when you go and look for cars to buy off people, you're gonna want to buy minivans because that's your highest profit potential. You'll still buy trucks, but maybe you won't put as much energy and time and resources into finding those trucks to resell. If a truck comes around and you see one, great. If it's a good deal, I'll buy it. But if not if it's for not the right price. And like I said, you're more interested in looking for a van because it's your higher profit margin. You're more interested in looking at the setups that you've seen work by looking at your trading journals. You're more interested in those, and then now you're going to double your risk, double the money that you're making, right? So to me, it's a no-brainer. Like I said, I've learned so much just from looking back at my past uh, trades. One example recently was I wanted to see how many of my I've been trying to take engulfing candles more into consideration when using supply and demand, and they work pretty nice, guys, for sure. And so I wanted to see how many of my winning trades had engulfing candles in them. And I went back and it was like 80 to 90% of my trades have engulfing candles in them. And then I went and looked at all my losers, and I noticed that a lot of them did not have engulfing candles. So, it wasn't 100% of my winners had engulfing candles and 100% of my losers didn't. But I could clearly see that there was some sort of edge there with engulfing candles. So now what I can do is, if it's an engulfing candle, I might risk a little bit more. Or if it's an engulfing candle, I might not risk less, right? Like, because now I've looked back at my past trades, I've realized the pattern, I've seen it with my own eyes, I've experienced the trade as well. Now I can begin to focus my money on the things that are working the best for me as a trader. That's pretty much all I want to say for the trading journal. Like I said, I think it's extremely important, and I think you guys should check out my video I just released with this podcast, how I use my trading journal. If you're not doing it yet, I think it's extremely important to do so. Check that video out. I basically show you exactly how I journal my trades, and I think it's pretty helpful. So if you listen this far, thank you very much for listening. If you liked it, give it a thumbs up. I'd really appreciate that. So, all right, guys, I'll see you guys probably Saturday for a weekly review.